Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is April 22. Let's dive into the week's stock market news. Middle East tensions drag down European stocks. UK inflation eases. European stock markets closed the week mixed as geopolitical tensions in the Middle East weighed on investor sentiment. The Pan-European Stocks Europe 600 index declined by 1.18%, while Germany's DAX was down 1.08%. Bucking the trend, Italy's FTSE MIB gained 0.47%. France's CAC 40 and UK's FTSE 100 saw modest changes. European bond yields generally rose. UK inflation and wage growth. UK consumer price inflation dipped to an annualized 3.2% in March, down from 3.4% in the previous month. While this marks the slowest inflation rate in 2.5 years, the decline was smaller than anticipated, mainly due to higher fuel and communication prices. Service inflation, a key metric for the Bank of England, slowed to 6.0% from 6.1%. Wage growth also eased less than expected, with pay excluding bonuses increasing 6% year-over-year. The UK's unemployment rate ticked up to 4.2% in February from 3.9%, and job vacancies continued their decline. Bank of England and ECB officials comment. Despite elevated oil prices and persistent inflation, financial markets are now pricing in the first UK interest rate cut to occur later in the year, rather than the earlier anticipated June. In contrast, Governor David Bailey struck an optimistic tone, stating that inflation was receding in the UK, calling the current situation disinflating at full. ECB officials reaffirmed the likelihood of a rate cut in June, but stressed that they would remain vigilant of oil prices given the heightened tensions in the Middle East. ECB President Christine Lagarde underlined the need for a data-driven approach in policy decisions, citing continued economic uncertainty. Now our insight into alternative markets. Operational excellence, the key to private equity value creation. In 2024 and beyond, the private equity pay landscape demands a fresh approach to value creation. The days when firms could rely solely on financial engineering and favorable market conditions are fading. To maximize returns and navigate a changing environment, pay players need to embrace new strategies that go beyond traditional tactics. One crucial shift is to prioritize operational excellence throughout the investment life cycle. This means moving beyond a singular focus on financials and instead conducting deep operational due diligence. Pay firms need to pinpoint actionable steps to improve EBITDA and growth rates within their portfolio companies. Once invested, it's imperative to work hands-on with portfolio company management to not only implement value creation plans but also enhance internal processes for sustainable, long-term growth. Technology and data analytics must become a fundamental part of the pay toolkit. Investing in technological solutions that optimize operations and streamline processes across portfolio companies is becoming essential. Utilizing data analytics to identify growth opportunities, assess risks, and guide investment decisions has moved from a nice-to-have to a necessity. Exploring the potential of AI and automation offers the chance to gain valuable insights and drastically improve efficiency. Integrating environmental, social, and governance (ESG) factors throughout the deal life cycle is no longer optional. Investors and stakeholders demand it, and it's smart business. Investing in sustainable practices aligns with a rising focus on responsible investing, potentially enhances brand reputation, attracts ESG-conscious investors, and can often improve operational efficiency. It's a win-win for PE firms that recognize ESG as a critical part of long-term value creation. Building a team of skilled professionals with a mix of operational improvement, data analytics, and industry-specific expertise is another must-have for PE firms in 2024. Identifying and supporting talented leaders within portfolio companies is also vital for driving operational excellence and long-term growth. Ongoing mentorship and training opportunities are essential to keep portfolio company management teams at the top of their game. Finally, navigating geopolitical uncertainty in 2024 will be a defining factor. Diversifying investments across different regions can help mitigate risks associated with geopolitical tensions. Scenario planning allows firms to prepare for potential disruptions and stay one step ahead. Flexibility and adaptability are key to adapting to rapidly changing market conditions and seizing new opportunities in a world often marked by instability. In summary, the winning private equity firms in 2024 and beyond will be those that recognize the evolving market dynamics and go beyond traditional approaches to value creation. By focusing on operational excellence, harnessing the power of technology and data analytics, integrating ESG principles, cultivating talent, and proactively managing geopolitical risk, PE firms can chart a course for success. Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.